Joining us here at Post 9, Helima Croft, RBC Markets Managing Director and Head of Global Commodity Strategy and Middle East and North Africa Research. It's good to have you on a day like today.
Thank you for having me.
Helima. So have your views about the trajectory of oil changed?
I mean, we have to watch, obviously, what happens in the Middle East. I mean, the real question is, will this war expand beyond Gaza? Will we see key players like Iran involved in any type of expansion of this conflict? So the oil market is watching very closely what is happening in a region which is still the most prolific production zone.
But without, I guess, the more blatant Iran involvement here in this current war, does it matter for oil prices?
I mean, this is a really interesting question, Sarah, because even if we don't have the expansion of fighting or any airstrikes on Iran, there's going to be pressure on the White House to tighten up Iran sanctions. I mean, Iranian exports have risen to 5-year highs. They're basically at pre-2018 levels. So the question is, will the White House, which just announced that they are tightening up price cap enforcement on Russia, will they also have to tighten up Iran sanctions enforcement? That's a significant amount of barrels. But obviously, the macro backdrop continues to weigh on oil.
Yeah, Helima, what does the price action in oil since the weekend suggest was in the market in terms of anticipated maybe incremental supply from Saudi or anything else that maybe is moving around given the situation?
The incremental supply from Saudi was a big story last week. Yeah. We had the OPEC JMMC meeting where they basically announced they were keeping the policy in place, and yet the market was soft because of a gasoline build in the United States, but also in the backdrop was this idea that Saudi would be putting more barrels on the market as part of a broad reset with the United States and Israel normalization. That looks like it's on hold for now. So the question is, what's going to win out this year? This broader concern about the macro backdrop, potential demand softness, or questions about the security of supply?
Meantime, I'm curious to know what you thought of Exxon Pioneer and what that does to these giants' ability to be nimble in a global economy that continues to be uncertain.
I mean, this is the big play in terms of the shale play. And the interesting question is, as we look at on the market, what is going to be the role of shale in balancing supply? I mean, shale has grown this year. U.S. production has been on the rise. But still, the conversation comes back to what is OPEC going to do? What is the Saudi policy going to be? And OPEC and Saudi still remain very much in the driver's seat when it comes to oil prices.
What about on the demand side of things? I mean, we've been talking mostly on supply, but are demand forces changing too?
The number last week on gasoline did catch the market by surprise. And the question is that some leading indicator of real softness in terms of U.S. gasoline demand? Or is it a story about refineries? Refineries running very hard to produce distillates, diesel, other products that are in a lot of supply demand. And the question is there just too much gasoline as a byproduct of that? So we are waiting to see really, was the build from last week indicating a significant slowdown in demand in the United States?
The API invoking the idea of demand destruction, right, in gasoline, but you know we just barely touched $4 a gallon. I mean, it seems like we've been there before.
We have been there before, and yes, there is a lot of gasoline on the market. Again, refineries have been running hard because there has been demand for other distillates. And so the question is, what does the data look like this week from the EIA? We're going to be looking at 10:30 to see gasoline data, 11 for the crude inventories. So that's going to give us signposts on where we're headed.
Finally, this morning, OPEC did raise their, I think, non-OPEC supply forecast. Is that material? Is that a marginal number that's important?
It is important. I mean, U.S. production has been growing. That has been a story. And it leads to the question about what is OPEC going to do next year. The Saudi unilateral cut has been extended through the end of this year. If it's a softer Q1, will that unilateral cut extend beyond this year?
Your guess is?
My guess is if we are still concerned about the macro backdrop, if we're still concerned about demand, I think there's a significant chance that Saudi cut rolls over.